watchers is how is the Fed's move going to impact India in the future? We spoke to a bunch of experts today, and they're of the opinion that India is going to outperform the emerging markets, at least for sure, in the medium term.
Not a lot of downside for India. India, in fact, is our top overweight market in AEJ at this point. So I think after the demonetization, we've got the Indian market at a very good level. I would still expect a little bit of downside given the risk that I mentioned, higher rates in the U.S. impacting flows from EMs and some cyclical slowdown in the commodity and industrial space, as well as cyclically rising China risks. All these will combine to put some downside pressure on EM assets in the first half.
The emerging markets are going to hold up pretty well against developed markets going forward. Certainly it's one of our overweight markets as well, so we agree on that one. And our call for 2017 is that emerging market equities will be up somewhere between 5 and 10%, perhaps close to 5 than to 10. It'll be a slow grind as opposed to being an explosive move higher. That's consistent, we think, with our macro view. So India could get a little bit more upside than that, possibly around the 10% level. But it's an outperform in our view.
I think on India, it is our favorite among Asian EMs as well, because effectively this anti-corruption and demonetization is basically buying time, right? So it's kind of resetting the Indian equity market for better gains. And I think the Indian economy is more insulated from these external impacts because it does not depend so much on exports or external debt, right? So I think that in terms of resilience, India ranks high. In terms of growth, it ranks high, and it also has some potential reform dividends.
Okay, so the